Hey, we've been talking about psychology. We've been talking about risk management. We've been talking about journaling trades, right? We've been talking about edge data. Let's go back to talking about setups for just a moment. Bear with me, okay? Let this video kind of be a resurfacing of some things that you might already know. You might already know about capitulation in a market, right? You might already know that sellers win sometimes or buyers win sometimes, and the market reverses. We're going to be talking about timing bottoms with volume, maybe not the exact bottom, etc., of a larger trend, etc., etc. We're going to talk about timing bottoms, okay? What bottoms should look like, right? Why do bottoms look like this, right? And not all bottoms, right? We're going to specifically talk about a 3-bar capitulation, although it doesn't have to be 3 bars. We'll talk about that later. But why do bottoms look like this, right? Why does volume look like this in reversals, right? Tops or bottoms. Why do they look like this? So first things first, guys, price and volume is all you need. You don't need moving averages. They help, right? It can help you form or visualize the trend. You don't need volume profile, although it can help. Matter of fact, I would even argue you don't even need volume. All this stuff just helps. I specifically use price and volume because volume, in my opinion, is the most important tool you can have in the market. It shows you levels of interest, okay? Many people are trading different setups. Understand? We want to be on the side where the most amount of setups are being traded at the same time, where bias is in one direction, right? Where everybody's saying, wow, you know what? This is going down. We want that to be aligned with our view, right? So then we can hop on the train, or we can even create the train, right? In the future, if you got large enough capital, etc. Volume is the way to do that. Okay, it shows the actual interest, right? How many strategies do you think there are? Guys, there are so many strategies, you wouldn't even believe how many strategies there actually are. We want to be on the side of the market where the most amount of strategies are coming together. Everybody sees it, right? And there's no place to go but where we're indicating, right? Sometimes it's bad when everybody's weighted on one side. It can go to the other direction. We're going to talk about why that's capitulation here, okay? Anyways, price and volume, that's all you really need. In fact, some people argue price is all you really need. Personally, I'm going to disagree. But let's go to the next slide, okay? Why does this work? You ever thought about that? Why does volume matter in the markets, okay? Volume is positions. Understand that. When you have a sale in the market, when one volume prints, there was a buyer and a seller. Make sense? So all that you're seeing in the volume, when you see these bars here, you see some are red bars, some are green bars, you're going to hear me say, oh, buyers or sellers. Although I'm going to get, that's more advanced reading of volume. We can talk about why we think they're buyers and why I think they're sellers. Just look at the volume as interest. That's all it is. Green or red means nothing. It means interest, right? So why do we have interest increasing? Make sense? Why do we have interest dropping off? Make sense? This is positions in the market. When there are positions in the market, it's going to be shown through interest, through the volume, okay? Anytime you hear volume, it means interest. Anytime you hear interest, it means volume. When there's more volume, when there's more interest, guess what happens? Price moves in larger directions, right? When I'm talking louder, you cover a larger area. It's bigger. When I'm talking quieter, you cover a smaller area, right? Smaller. The more volume that there is in the market, the more direction we are going to be able to have. Make sense? Volume is the key factor in why markets move. You need interest. You need positions for the markets to move. Now, we can get more advanced and talk about, positions need to be taken out first and this and that. We're not talking about that. We're just talking about why this works is because there are positions in the market, okay? Ultimately, capitulation is a change in bias, okay? It means that positions came into the market, there was a bias, these positions were saying, we're going up, let's go up. Everybody's saying it's time to go up. Or we're going down, let's go down. Everybody's saying it's time to go down. And guess what happens? All of a sudden, that bias gets taken advantage of, or that bias capitulates. Make sense? Capitulation means they surrender, they change it over, it turns over, right? It's finished. That's ultimately what that means, right? So when we see positions coming into the market with a bias, we can see the bias by how the price is moving with a bias, and ultimately you see the bias changing. We know the bias changes. Why? Because we can see the volume. We can see the sales happening, right? If we see all these sales coming in and prices moving up, then we see all of these sales coming in and now prices moving down with relatively the same amount of volume. We can decide somebody won here, right? And we're going to talk about why I'm saying that, because you have to also look at the way the candles are actually forming, the spreads of the candles, which is why 3-bar capitulation is such a strong setup. Go look at it for yourself, okay? Look for this setup, see how strong it is. And it's nothing special. It's just using your brain as why it's so strong, right? It's a redirection of force. It's a literal capitulation by the definition. And it doesn't have to be only 3 bars, but the 3-bar capitulation is the strongest setup that I have in my pocketbook. When I see it, that's an A+ setup. All right? So, does it have to be 3 bars? No. It doesn't have to be 3 bars. Look at the volume on this pivot. Okay? Just the one that I have, the first set of circles here, the earliest one that we have. Look at the amount of volume coming in on Tesla here. Okay? Short answer is no, it does not have to be just 3 bars. We see volume coming in the market. And look what happened originally before we pivoted. We had a very strong downside move. Volume was coming in the market. Okay, look at the red volume. Okay, a lot of interest coming in the market. Tesla's getting sold off aggressively. Okay, now what happens? We see interest continue to come in the market. So volume is increasing. And what happens as the volume continues to increase, right? The market actually turns around. So we have a pivot and volume is increasing throughout the entirety of the pivot. That is a change in bias, a redirection of force. It's a complete capitulation of those sellers that entered the market. Some people might call this a sweep, a stop loss hunt, etc. I like the term capitulation, and I think it fits perfectly for what happened on Tesla there. As you can see, that was the bottom for a while. If you look at the second set of circles, okay, specifically, that was also a capitulation, but that was actually 3 bars specifically. Okay, we're going to look closer at some 3-bar capitulation setups on some case studies. Okay, case study number 1, look at Amazon. Okay, this is October 27, 2023. Okay, top photo. I want you to look. This is just it zoomed in. Look at what happened here. Okay, we have a pivot. Now, that's in hindsight. That's in hindsight that we know a pivot was created. But just think, as this leg down was being formed on the pivot, look at the volume increasing. Okay, now, this is more advanced, but I would call that sellers are absolutely interested in the market. They are bidding this market down. We know there are buyers there because there is interest. In fact, there's always buyers, right? But we know that there's a lump sum of buyers available for the lump sum of sellers, okay? And if you look at the way that the candles are spread out, the first bar in those 3 volume bars of our capitulation setup, the first bar is actually a larger spread than the second bar, okay? Volume came in. It was very aggressive for sellers, okay? Another bar comes in. There is more interest for sellers, okay? Now, look at the spread of the candle, okay? I'm saying there's interest for sellers, but understand there's also interest for buyers. For every seller, there's a buyer. Volume means interest in total, right? Look at the spread of the candle, okay? It's very, in relation to the previous bar, it's smaller, okay? So we have originally a larger spread. Second, we have a smaller spread, indicating some kind of war here, some kind of absorption going on. Now, it doesn't have to capitulate. At this point, if we would have saw price and volume do anything other than what we've seen here, we might have been able to actually continue shorting, right? This would have actually been a valid breakout setup, but it wasn't, was it? No, this was a bottom, because look at what happens next. We see volume coming in through the other side of the pivot in hindsight, but if we would have seen the volume coming on that day, we would have understood that on that gap up, when we had price pushing all the way to the upside like that, we can verify that those sellers that entered the market on that downside move with increased interest are trapped, and they are aggressively getting out of their positions. They are changing their bias. It's an active capitulation. That is a bottom. That's a bottom signal. Now, this is not financial advice. Don't go HELOC your house and try and take my word for it. This is from my back testing. This is just the way that I read the volume. Okay. If it makes sense to you, whoop-de-doo, we're getting somewhere, right? So, bottom picture here, look at where this was in relation to Amazon's uptrend. We were actually in a ranging market that faked out the downside, right? So there were there was obviously interest in selling, and we got aggressive selling that was then capitulated, right? So, next case study. AMD. This is a bearish capitulation. Okay. Look at the 3-bar capitulation here. In fact, this one is not just 3 bars. This is like, 5 bars. Well, yeah, about 5 bars. But we could just say, look at the 3 bars for now, okay? In fact, this one is not as cookie cutter. The price action on the second bar, the second highest bar in that circle that I've drew, the price action on the second highest bar didn't have a smaller spread. This was actually a pretty decent setup, it looks like, for longs. But what happened in the hindsight? Right? You saw aggressive capitulation to the downside. Okay? Now you might be thinking, when you see something like this happen real time, you might be thinking, oh, there's no way it's going to continue lower, right? Have you ever thought that? And that is literally the time when it's the best time to enter, is when you don't think it's going to continue lower. That's the time to enter, is it not? I mean, it's almost like psychologically we trick ourselves into not entering a position that truly looks as bearish as it is. So that's another case study. And we can see in the picture below where this actually was in terms of this uptrend. In my opinion, that was the major signal that we were going to see downside, was that capitulation that we saw there. Now, it wasn't the exact top, was it? No. In fact, if we're looking at volume in a more advanced way, we could have timed the top a little bit better. In fact, we could have timed it a little bit earlier, but that's a little bit more advanced, and it's not exactly the best setup. Make sense? Your best entry doesn't have to be the best price. Make sense? So I really love that setup for AMD, and it does foreshadow a lot until we do capitulate back to the upside. We will just keep getting bearish exhaustion lower and lower. And if you guys don't know, I have two setups: exhaustion and capitulation. Okay, trends experience two things. You see a change in direction and you have continuation, right? That's all it is. You might see range in between or range that forms a trend, etc. But to start a trend, you need change of direction and you need continuation. Okay, those are my two setups that I trade. Right now we're studying capitulation. On to the next case study. So let's look at Mara. Same thing here. Volume was actually decently low on those first two candles there. Okay, so why was there so much volume on that third candle pushing it up? Look how many bars we actually managed to cover on one green big volume bar. We managed to cover 1, 2, 3, 4, 5, 6, 7 bars in one green candle high volume bar. So all of those sellers that might have been interested on those 7 bars could have capitulated in that one day. Does that make sense? Change in bias. Change in direction. Right? That's what you need to ingrain in your head when studying capitulation. And we know it's a change in bias because the interest, right, is absolutely shifting. So this one's a little more advanced. Not exactly 3-bar capitulation. I would say the volume wasn't exactly the best for 3 bars, but this is a non-cookie cutter study, specifically on Mara, where you can have capitulation in 1 bar that covers time of bars, right? If that makes sense. Little tricky here, but still a 3-bar capitulation setup. We have volume increasing, spread actually shortening on the 2nd bar, and the 3rd bar capitulating entirely. So let's review, guys. What is capitulation? Okay, let me change my deal here. Okay, look at this. The act of surrendering or giving up. That's the definition. Okay, the act of surrender or giving up. So what do we want to see? Oh, sorry about that. What do we want? Oh, there we go. What do we want to see, right? We want to see, guys, we want to see bears getting trapped. We want to see them aggressively getting out. Why would they do that if the bias isn't changing, right? That's why this is such a strong setup. There's actual positions there, guys. There's actual positions. You can understand there's actual interest. Why would I not want to put my stop loss there? Make sense? There's actual interest there. It's a strong setup. Understand that. Not financial advice, obviously. But from my back testing and studying this, it's a strong setup. So let's look at this now. Now that we understand that, look at this capitulation here. Okay? Look at this capitulation here. Capitulation turns into exhaustion. Understand that. Okay? So we have all of these sellers over time here. A lot of them got out quickly in fewer bars. Understand that. Look at the period of time. A lot of them got out quickly in fewer bars. Does that make sense? So this one is not as cookie cutter, but I'm trying to ingrain in your head. Change of bias. Right? Change of bias. That's what capitulation ultimately is. And if we're looking at 3-bar, if we're looking at the 3-bar capitulation, this is as cookie cutter as it gets. Is this Amazon study right here. It's as cookie cutter as it gets. So guys, I hope that sheds some light on why this is such a strong setup, right? On how you can use volume and price to determine where exactly the market's trying to go and how strong of a move it can be and why you should be using volume to verify that. Because guys, if there's no positions, if there's no interest, guys, if there's no change in bias, guys, what's going to happen, right? You need volume, you need interest, you need positions for the market to move. The market's not just going to move, okay? Have a good one. Like and subscribe if you enjoyed the video. Cheers, y'all. To the next one. We'll be doing exhaustion next. Stay tuned.